Hey everyone, PayPal is on my list of top 25 2024, and so far year to date it's performed relatively well. But for investors looking for a longer term perspective on PayPal stock, I'm going to answer where PayPal stock price could be 5 years from now in 2029. So come along, let's look at this longer term PayPal stock prediction.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
So one of the things I'm going to need to make this stock price prediction is PayPal's current share price. Right now, it's trading at $67 per share. It started the year around $62 per share. So almost 10% rate of return so far in the first quarter of 2024. I'm also going to need PayPal's forward price to earnings ratio. As of this recording, is trading at a forward PE of 11.89, arguably the cheapest you've been able to buy PayPal stock for in several years. That's partly why I've recommended PayPal as one of my top stocks to buy in 2024. Of course, one of the reasons why PayPal stock is trading at a depressed valuation is because earnings growth has come to a halt. The new CEO came in and said, forget about any earnings growth in 2024. Earnings per share is going to be flat. That being said, longer term, its earnings per share expectations are quite strong. Let's take a look at that. So like I mentioned, in 2024, investors don't expect any growth in EPS for PayPal, but starting next year, starting 2025, they expect robust growth to begin. Earnings per share is expected to increase from $5.07 in 2024 up to $5.60 in 2025. Longer term, investors that are following PayPal stock, or I should say the analysts on Wall Street that are following PayPal stock, they expect PayPal to deliver 19.8% earnings per share growth over the next 5 years. That's a strong increase from the current year. In fact, Wall Street analysts are expecting worse than flat. They're expecting negative 0.6% in earnings per share for PayPal, but for the next 5 years, they expect PayPal to recover. Now, part of the reason for PayPal's recovery is going to be a return to normalcy of consumer behavior. Remember, PayPal offers incredible convenience when you're shopping online or when you're shopping on your phone. Logging into PayPal and paying for something is a lot more convenient than taking out your credit card and typing your credit card information in a new website you're shopping at. So that incredible convenience is PayPal's primary competitive advantage, and also its Braintree and other online transaction services where it makes a margin on those sales online, e-commerce. But right now, consumers have been spending a lot more than usual away from home, spending a lot more than usual on travel, at bars, at restaurants, at theme parks, etc., etc. And that's an area where PayPal doesn't really have any competitive advantage, and PayPal gets used for as a payment less often than it does when you're spending money online. So starting, I would say, next year, 2025, consumer behavior should normalize as people get this out of their system, as people get this away from home spending out of their system, especially as prices have absolutely soared. Have you looked at travel prices lately? Have you looked at hotel prices, theme park prices? They've absolutely exploded. So after people get it out of their system, I think this is the final year following COVID where people will spend more than usual away from home. And I think consumer behavior will normalize in 2025 back to where pre-pandemic the balance between away from home and at home, or goods versus services, that normalized balance of consumer spending will return in 2025, and that will be a tailwind for PayPal because longer term, people are going to spend more online versus in person. People are going to spend more online versus in person because it's just so much more convenient to buy something online and have it delivered to your doorstep than to go in person to shop for whatever it is that you're looking for, whether it be clothing, whether it be accessories, whatever it might be, right? It's just so much more convenient to shop online, and the prices are usually the same, if not cheaper online. And so why would people want to drive somewhere, especially in more populous cities where it's so inconvenient to even go down the street, look for parking, get out of your car, walk the mile to the store and find what you're looking for, then have to bring it home with you, when there are companies that'll offer you free shipping and similar prices when you shop online. So that trend is going to be beneficial. It's a strong tailwind for PayPal longer term. Now, I'm not saying there'll ever be the case where 100% of shopping will be online, but certainly a larger percentage of shopping will be online over the next 5, 10, and 20 years, and that's going to be good news for PayPal to be sure. Okay, so now that we have the numbers, we can go ahead and begin with the price prediction. So the $5.60 in earnings per share, remember we got from the Yahoo analyst update for what they think PayPal's earnings per share will be in 2025. They also suggest PayPal's earnings per share will grow at 19.8% for 5 years. And when I apply that growth rate to the $5.60 EPS for 5 years, I get a projected earnings per share in 2030 of $13.82. If PayPal does indeed deliver that $13.82 in EPS in 2030, and I apply the current 11.89 forward PE ratio, I get a stock price of $164 per share for PayPal in 2029, 5 years from now. Now, currently the stock is at $67 per share, so that would be more than 2.5 times where it is today. I actually think the valuation is going to increase, partly because the reason the valuation is so cheap is because PayPal has not delivered earnings per share growth. If PayPal delivers close to 20% earnings per share growth for 5 years, the valuation is going to be much higher. You're not going to be able to buy PayPal at the current valuation after it delivers that kind of growth for 5 years. Because the reason the stock is depressed is because the lower earnings per share expectations in the coming year. So if those earnings per share expectations are better, then the valuation is going to be better. So I think it's going to be higher. So if the forward PE increases to 14, then the stock price could rise to $193 per share. If the forward PE rises to 16, then the stock price could rise to $221 per share, which would be roughly triple where it is today, $67 up to $221. And that's certainly a plausible scenario. But if the company does not deliver this kind of earnings growth, or if it does deliver this kind of earnings growth, but then looking forward for the next 5 years, its forecast is not that good, then the valuation could fall. A scenario that I don't think is very likely, but it's a non-zero chance. And so I want to model that and highlight where the stock price could be at that point. But even in that scenario where the forward PE falls to 8, the stock price could still almost double to $110 per share. So you could see why I've liked PayPal stock here, and I've recommended PayPal as one of my top stocks to buy. I see good upside for PayPal stock, and I also see a limited downside for PayPal stock. I like that scenario when I'm looking at an investment with strong upside and limited downside. So where do I think PayPal stock will be? What's my most likely scenario out of all of these scenarios that I've modeled? I think PayPal stock price most likely scenario is between $175 per share and $185 per share, or somewhere between the multiple of 12 and 14. That's where I'm forecasting PayPal stock price could be 5 years from now. So roughly triple the valuation of where it is today, or more than 2.5 times from where it is today is where I expect PayPal stock price to be. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.